Hey guys, Trader Tim here from TJMacTrading.com. Today we're going to be talking about price and volume and why those two are the only things you should need to be able to trade successfully. So, in back of me here, in front I have my Infinity's futures price ladder, but behind me here I have the 5-minute chart of the ES, the E-mini S&Ps. This is yesterday's price action here. We just opened this morning, Friday, February 5th, and then we have the 3rd back here. So we can see yesterday we gapped down, hit a large gap down. We attempted to move higher by about a tick before breaking this this support level here and continuing to move lower all day. So right off the open, we can see that with such a large gap, while we do know that approximately 80% of gaps fill, with a large gap like this, it's more likely that this will turn into a trending day in the direction of the gap, in which was the case yesterday. So what we did here was we got short, rather, underneath the low of the opening bar, the first 5-minute bar, and we put a stop above the high, and simply there's a couple ways you can look for an exit. Simply trail your stop above the high of each prior bar. So when this candle closes, when this candle closes and this one opens here, we simply move our stop from the high down to this bar. When this candle closes here, we simply bring our stop from up here down to here. Another way you can do it is it's nice to sell a portion at 1 point or 2 points. Another thing you can do is look at the tick. I don't consider the tick an indicator in the sense that it's a real-time indicator. Both the breadth, the tick, the advanced decline line, and the trend, I consider those real-time indicators rather than like a stochastic, a MACD, which is more of a lagging indicator. You'll see I do have a 20-period exponential moving average on my chart. That's simply to get a quick gauge of the trend just by looking at the chart briefly. One of the other things that so we talked about that, we can trail our stop, we can scalp for a point or two, or we can look at the tick and look for, in this case, the market is moving down, look for an extreme tick in the negative 1,000 area to look to take profits. Now, in a trending day, you'll typically have many tick readings in the 1,000 plus or negative 1,000 level. So just because we have a negative 1,000 reading doesn't mean we can't continue to move lower. Now today, with such bearishness yesterday, you see we opened basically at the highs and closed almost dead on the lows. So we would look for continued bearish action coming in to today. Now I don't have the overnight, the Globex here. It goes right from the yesterday's action to today's action. I don't always like to see all the chop overnight. It's easier to see the chart and see the market during the day when I can see the prior day without the chop in the middle. So today we took a short right on the open, right below the prior the 5-minute bar, the close of the first 5-minute bar. Because we had a bearish bias coming into the day, we at least for the first portion of the day, seeing that there was a inverted hammer here, really triggered the confirmation and triggered the entry. We got short and took profits down here at the low tick of the day, which or at least low tick at that point of the day, which was close to negative 1,000. So you can see here we don't have many any indicators. We just simply use the market internals that we've talked about in past videos and up on the blog, as well as price. And we'll go ahead and we'll talk about volume in the second half of this video. So stay tuned and check out the blog if you do have any questions. TJMacTrading.com.